Good morning. How's everybody today? Excellent. Welcome to DFW. Thank you so much for allowing me back into your city. I love it here. It's been a while since I've been back here. And during the course of the day, because I grew up around here, my southern accent is undoubtedly going to return. So thank you. And I appreciate it very much. Boy, it's already coming back. So a couple ground rules today. Let's make sure our cell phones are in mute out of courtesy for all the speakers and other attendees. I also want to make sure that you have the opportunity to introduce yourselves to each other around the tables. Because one of the things that I love about the Money Show, and I've been fortunate to speak here for 20 years now, is that we have become a real family. It's a family of friends. It's a family of comrades. It's a family of like-minded investors. And it grows every single year thanks to the vision and tenacity of our founder, Kim Githler. Kim. Now, Kim, just so you know why I'm standing up here and not Kim, Kim said, you know, Keith, we're pressed for time, so I'm not going to introduce you today. And I said, that's okay. I've known me my whole life. And as you can tell, I'm kind of a quiet guy. That's how us traders are. We don't make a lot of noise, and we don't have opinions on anything, especially money, right? Is everybody having a good time today? Excellent. I like that. And you know why I like that? Because the markets have opened kind of rough today, huh? Anybody seen that? All right. We have something in our office, a saying that I want every single one of you to memorize today and take away. And there will not be a test, but I want you to think about it. Because on days like today, at times like the present, there is nothing truer. Chaos always produces opportunity. Say it with me. Chaos always produces opportunity. Not sometimes, not part of the time, not when it's ready. Chaos always produces opportunity. And the more the former, the more the latter. Yes? Fantastic. So I'm going to dive through a quick presentation, and then we're going to go off the rails a little bit. Kim wanted me to have as much time as possible, probably because she's going to kick me out of here when I'm done. But that's a different story. Do we have any lawyers in the room? Do we? We can overcome that. Okay. Past performance is no guarantee of future results. It's all your money. We're all big boys and girls. We can make our own decisions. Past performance does not guarantee. We got that? Yes, no? Okay, good. Times have never been tougher for individual investors, or at least that's the official story. Anybody heard that one? Yes, no? This is open interactive. The headlines are confusing. The markets have never been more challenging. Your options aren't great, and that's what they want you to believe. I don't believe that. I think our options are better than ever. Why? Because chaos always, say it with me, always produces opportunity. Bring that into your mind. How do you know which companies to buy and when and how? And that's always the real test. It's not the test when things get tough. It's always the test, period. And it's not how you make money when the markets are up and things are easy. It's how you continue to build wealth when they're absolutely nuts. Does anybody feel like they're nuts lately? Anybody want to put up both hands? Come on, we're among friends. I mean, really. Who's ever purchased a stock and watched it go into the toilet? Who's ever bought one that you're sure that's going to the moon and gone the other direction? Who's thought this thing was a sure thing and it turned out to be a dud? Anybody want to put up hands and feet? I mean, we've all been there, right? I've been doing this 45 years, and mistakes are tuition. That's the fun part about all this. So it's the stuff that people talk about. They really don't, but they should talk about it. And for 45 years, I've been doing this, and I love what I do because the markets are a never-ending puzzle, and they're always filled with opportunity. Sometimes you got to think defensively, like now, to be offensive. But you can always find something to buy. You can always find something exciting. You can always find a dynamic opportunity that can make you a pile of money if you're doing it right. Now, you can make a change, particularly this year, and this is today's topic, 3 things you need to do right to change. You can make a change for one of 2 reasons. Think about this. There's only 2 reasons to make a change. Number 1, because you want to master your money and you're tired of table scraps. Fair enough? Anybody been at the table scraps table? Oh, come on, I can't be the only one in the room. I mean, really, we've all been there, right? When we started as investors, we were uncertain. We didn't know what we're doing. We're scared. We didn't have any idea where the markets were going. Have you guys ever been there? Exactly. Oh, yeah, sometimes we're still there, right? Do I need to bring you guys more coffee? Oh, come on, I worked on that one. Or you've reached a decision point where you know you got to make a change and break through whatever it is that's holding you back. Now, sometimes that can be fear, sometimes it can be greed, sometimes it can be the news, sometimes it can be the internet, sometimes it can be your crazy neighbor or your uncle or your aunt. You know, how many people have been to a barbecue and people are like, oh, I'm never buying another stock as long as I live. I just was at one of those last week and I'm like, oh, sign me up. I'm going to go buy some companies now. Why? Because I know that emotions are typically off base. Humans, for all of our existence, are fear-based. We should be opportunity-driven. It's a very different psychology. But the reason this is important is if you are ready to make a change, and I bet every single one of you in this room is, and you can define change however you want, but I bet everybody in this room is ready to make a change. You're going to love what I have to say, and if you're not, you're going to hate every minute of it. There is no middle ground. There really isn't. Either you're ready or you're not. And that's uniquely up to the person looking back at you in the mirror every single morning. So staying on track and confident this year will come down to 3 things. And I'm holding up 4 fingers because I have treasury math. I worked for the Fed. No, just kidding. Seriously, it's going to come down to 3 things. And these are counterintuitive. But they're very, very important. These are lessons I've learned the hard way, in the trenches, working at some of the biggest houses on Wall Street over the years. And again, I've been doing this 45 years now in global markets. I've been extraordinarily fortunate to have won more than I've lost, to succeeded more than I've failed. But I keep getting back up and getting back into it. And my great-grandfather was a fighter pilot in World War I. He used to tell me, he used to rap me in the chest with his cane, Mr. Keith, doesn't matter how many times you get knocked down. It's how many times you get back up that matters. And that's true in life, it's true in the markets, and it's sure as hell true in fighter jets. And our youngest son, by the way, many of you in this room know him. He is now about to fly F-18s and F-35s for the U.S. Navy. So thank you for all of you guys supporting him. Appreciate it. His wife, his new wife, some of you already know this because you've met her, his wife of a year now is also a naval aviator. She's in the back seat though, so you can bet who's in charge. And quite literally, the Rios and the Wizzos, EWOs, they are definitely in charge. 3 things you want to deal with this year. Number 1, we live at a time when opportunity is such that you will need to make more concentrated bets than at any other point in history. This will be counterintuitive, this will be uncomfortable, because you've been trained for generations to diversify your wealth. Does that make sense? How many people have a problem with this one instinctively? I mean, I did when I first started working with it because all of the models that we built at Wilshire are now used commonplace in much of Wall Street. We pioneered the concept of portfolio allocation, diversification, portfolio modeling, the efficient frontier, all the fancy stuff that your advisors trot out every single day. Now, diversification isn't bad, but the point is you're going to want to make definitely concentrated bets. Number 2, you're going to want to play to win, not to lose. Think about that for a second. We laud Warren Buffett, but we crave diversification. What does Warren Buffett do? Does he play not to lose or does he play to win? Warren Buffett plays to win. Warren Buffett concentrates his wealth. How much of Uncle Warren's wealth is concentrated in 5 stocks? 80%, roughly 80%, give or take on a given day. So why do we crave diversification when some of the best investors in the world single out the best bets they can find? And number 3, we'll want to unlearn catastrophic fear-based behavior and replace those with reward-oriented choices. And what I mean by that is we want to, again, start thinking to win. We want to start thinking about focus. We want to start thinking about those great companies that can move us forward through thick and thin. Anybody heard of Palantir? Anybody own Palantir? Yeah, exactly, right? $6 a share, $7 a share. I stuck my neck out on national television and said, hey, you know what? I think this one's going to go. And I wasn't, I could have easily been wrong. There's no doubt about it. That goes with the territory. I could have been wrong. But fortunately, I wasn't. That's an example of a company that is playing to win at the very highest level. And by the way, if you have not read Dr. Karp's book, I encourage you to do that. I think it is one of the must-read books for every single investor in this room, because it will realign your thinking, it will focus you, it will help you focus on where the market goes. I also think you should read Peter Thiel's book, 0 to 1. Has anybody read that? Definitely read that one as well, because it will guide you to breakthrough thinking. N+1 is a better mousetrap. 0 to 1 is a company that's going to change the world. I submit as an investor, 0 to 1 is where you want to be. And with that in mind, I'm going to go off the rails a little bit as soon as I can find my phone here. The markets are kind of messy, yeah? How many people are tempted to give up and call it a day? Anybody? Oh, this is great, not one hand. I love it. But the reason I want to forward this to you, I want to think about this, is that the sky really is the limit. Here's some examples. There's 10 examples. I just pulled them off. These are all themes that every single one of us in our room should be thinking about as investors. These are 10 reasons to stay involved, to stay focused, and to stay on offense. Because what's the best way to buy and make money in this market? Buy low, sell high. Why? Because chaos always produces opportunity. So healthcare is being redefined in real time. Cancer may be a chronic condition. Alzheimer's progress is very real. Moderna and Merck have got personalized mRNA cancer vaccines that have reduced melanoma or death by 44%. This is already out there in phase 2. Think about that for a second. As AI comes on, we could solve cancer very realistically within the next 10 years. I submit this marks the start of a healthcare revolution, not the dawn or ending of a trend, right? Personalized and customized medicine. So gene editing therapies like Cascavy. I don't know who names these medical things. Do we have doctors in the room? How do you guys pronounce these prescriptions? Unbelievable to me. But anyway, this could cure inherited genetic diseases like sickle cell and beta thalassemia. Is that right? Did I say that right, you doctors? Did I say that right? Okay, thank you. My emphasis on the wrong syllable. AI. You guys heard of AI? Everybody makes a mistake, and I run into this on television a lot. Everybody makes a mistake of thinking AI is just a tech. It is possibly the greatest single tech in recorded human history. It will alter the trajectory of our planet. And I think that they will create more profits in the next 10 years than the last 50 combined. What's happening in the markets today is an amazing buying opportunity for companies like Apple or NVIDIA or Palantir or a dozen other names you're going to hear about from all of the fabulous speakers who are in this building this weekend. And I encourage you to pay very careful attention to every single one of them, because every single one of them has the chops to be here. They have the experience. More importantly, they have my respect, and I hope they have yours, because I learn something new every time I come to a money show, even though I speak here. Cody and I have known each other for a long time over here. He's a classic example. What can we do that's different? How do we get ahead? He's going to talk about that when I'm done. But the point is, always play forward, because smart companies are rewriting the rule book. Defense spending, kind of important right now, yeah? I would submit so. Record $2.24 trillion and accelerating. There's a combination of hardware and software, but there's an argument going around that these big defense companies are done. Right. That's like the U.S. Navy getting rid of aircraft carriers because the Houthis have speedboats. No way. Not going to happen. They've got multiple billion-dollar contracts. They're going to go to the mat. They're great investments. They pay huge dividends. And they've got the balance sheet, scope, scale, and spending to handle anything that comes on the board with regard to drones and AI. That's the kind of company you want. So the smart money's on both. Quantum computing. Have you guys heard of that? Come on. Quantum computing, yeah. So here's an example that really got my attention. Google's quantum computer just solved a problem in 200 seconds that would have taken a conventional computer 10,000 years to process. Wow. Company like Palantir, AIG insurance company, took an underwriting process using Palantir. It's not quantum, but it's getting into that neighborhood. They brought the underwriting process that would have taken 3 weeks down to 2 hours. Imagine what happens to companies when they can print aircraft parts. Imagine what happens to the production supply when suddenly you can order something like that and have it delivered. Amazon, even Amazon is going to be challenged. These are things, global data. We are now going to produce more data by 2030 in every 24 hours than we did all of 2020 combined. Now, when you think about it, we've produced 97% of all the data in recorded human history within the last 3 years. Whoosh. As an investor, that is an amazing opportunity because we can move forward. Cybersecurity. Cost, cybercrime is $10.5 trillion a year. That's up from $3 trillion less than 10 years ago. Cybersecurity now, executives that we talk to, they know that they must spend on cybersecurity to keep their businesses and their customers safe. They are handing over blank checks to the likes of CrowdStrike, for example. So as an investor, yeah, the markets may sell down, but I submit the value is better than ever. Cash on the sidelines, $7.1 trillion right now. All of that money, I was talking about this on Varney and Company Fox earlier this week, all of that money's got to go somewhere. How exciting is that? And finally, the space economy. I mean, NASA, what, 3 rockets this year? How many's Elon sent up? A couple hundred? I mean, there are 8,000 satellites in orbit right now, and there are 2.6 billion people that are still offline. Imagine what happens when they come online. What do you think Zucko is going to do? That's going to be an entirely new Facebook and Meta. I mean, unprecedented opportunity is what I'm trying to drive into your head, get you thinking about. That's the world we live in. So if we're going to be investors, we have an unprecedented opportunity in front of us, one the likes of which we haven't seen in a generation, maybe 2. So who remembers the dot-com crash? Who got skinned a little bit in the dot-com crash? Who wants to put up both hands? Right? What about the global financial crisis? 2007, 8? Guys remember that one? Greek banks. Whoa, here we go. Currency crisis, 2011-12, COVID-19. I mean, my point is this stuff comes and goes much more regularly than we think about. And people say, oh, this is uncharted territory. What are the 2 most dangerous words in the English language to any investor? Yeah, but. Right? Well, we know the data. We know the profit potential. Every time you hear a yeah, but, you want to push that away because doubt and uncertainty and emotions are temporary influences in the market, and they're running really high right now. Fear is out of control. The doom and gloom squad is having a field day. I don't know about you guys, but my email box is getting carpet bombed. Unbelievable. I don't know where these people come at, but they all come out of the woodwork when stuff hits the fan. The problem is many of the same people who are aggressively doing that kind of marketing and fear-based messaging have correctly predicted 10 out of the last 2 recessions. And they sure as hell haven't predicted the rise of these profits. I know people, because of the fear and doom and gloom, who got out of the market in 2008 and 9 and never got back in. 5%, yeah, that's great in the treasury. Okay, 4%. NVIDIA is up 21,000%. 5% doesn't seem so great. I mean, if you can make 5% and you're good with that and you don't need any more, okay, great. But most of us can't afford to throw away that kind of profit potential. I can't. So I want to play offense. I want to move forward. I want to continually build wealth because the world is creating it. That's where our future is. And that's why, as investors, I submit we've got some of the most exciting times we have seen in a generation on our hands right now. Put aside the fear, put aside the emotion, stick to the facts, because profits are a permanent part of the financial landscape. Does that make sense? Cool. All right, with that, we are off the rails. Let's get back on the rails. And that was it for me. Thank you very much for putting up with me. I'll be happy to take any questions. And let's roll. Yeah? All right. Do we have any questions out there? That's a first. Really? Okay, yes, sir.
Hi, my name is Rahul.
Nice to meet you.
Good summary, great.
Thank you, sir.
What are your 30 seconds on how this tariff battle will end?
How the tariff battle will end?
Yeah.
Well, number one, we know from history that tariffs stink in the short term, but we also know that tariffs change the world. So, how does it end? I don't know. My expectation is that the president is playing high-stakes poker and that sooner or later, one or more of the trading partners will blink. What that costs and how he goes about it, I have no idea. I personally would have handled them very differently, but I don't do politics, I do money. And we know from, again, if we go back through time, if we talk about the British navigation tariffs of 1571, we talk about the Morel tariffs of 1861, we talk about Colbert in 17th century France, we talk about the Meiji era in 19th century, we talk about Bismarck in the late 1900s, or late 1800s. We know that tariffs can fundamentally change the course of a nation and of its industries. That's the argument that the president and his advisors are pursuing. Where it goes and exactly how it goes, I don't know. I believe that America is filled with clever, resilient, and smart people. And I believe that our nation and our industries will rise to the challenge, as will the nations of other places.
So just a quick follow-up on that. See, you very well summarized with the world of AI I work. There's a lot of automation. Massive automation will happen in the next 5 years, whether it's programming, with robotics. So even if you want to bring the jobs back, you just can't, because you can get a factory here. There'll be only 15 people managing 100 billion worth of manufacturing.
I disagree with that entirely, and I'll tell you why. Okay. People say AI is going to cannibalize jobs. It's going to cannibalize low-functioning jobs. But what it's going to do is it's going to free up humanity to pursue other things. So I think that the real challenge with AI is controlling it so that it doesn't become intelligent on its own and decide we're a threat. But I think that the real power for AI is going to be humans, manufacturers, jobs, companies that learn to work with it and harness it. And we're already seeing it in medicine. We're already seeing it in other areas. Manufacturing is going to change because of it.
I agree with that, but the number of it with
well, why don't we do this? Why don't we debate that later? But my view is that the tariffs are going to come through this, and that we're going to have expansion rather than contraction because of AI. And it's going to create tremendous value for investors. All right. Am I free to go, Kim? Never. Okay. Couple things I want you to think about today. We kind of laid the groundwork. I want you to think forward. If anybody's interested in wealth management that's using some of this research and things we talked about, I'll be speaking several other times. Also see JB and Noriko, who are over here at the table. Stand up, please, so everybody knows what you look like. Thank you. That's my bride, and that's JB, John Busey. Thank you very much. We're coming up on 30 years, by the way. Thank you. Thank you. I say Noriko is the ultimate Japanese souvenir. Yes, you do know more, and we're not telling about that. One other question. Okay, is now the time to buy Tesla? What do you think? Who said yes? Exactly. Anybody else? Me! I got a couple of things here. I think Tesla 5X's in the next 5 years. I'm going to go out on a limb, and when we get back together, I think it is going to be the single highest performing stock in the S&P 500 once the hate stops. The value, I've talked about this on CNBC and Fox both recently. I think the value of what the robotics, the FSD, the artificial intelligence, the silicon, which of course I said during an interview, I called it silicone and everybody made fun of me. I hadn't had enough coffee yet, but what can I say? You know, it's like Elon works on the silicone, yeah, huh? I think that the company is going to expand radically, and this may be a generational low for that company. We've been here before. Tesla, people love to hate Tesla, but what they're really doing is hating on a very successful individual who has changed the course of the planet. Now, he's quirky. Admittedly, I own Tesla as well. I probably don't own enough. There's days where Elon Musk makes me absolutely nuts. But that doesn't change the fact that I think the company is one of the greatest, most innovative ever to occupy this planet. So my view on Tesla is 5X in 5 years. Anybody else? Yes, no? One other question.
Everyone wants to market time, right? So Tesla, they're like waiting, maybe tomorrow, maybe this week, we're all, right? That's our view. Speak about that.
About time. Timing. Okay, so one of the questions that is a great transition in today's investing environment is this idea of time. People say, well, Elon says he's going to do this, but then he goes and does it. If you're talking about making a tractor, or you're talking about making a home, or you're talking about making a conventional good, producing a medicine, one of the things we're seeing because of AI and computational power is time is compressing. The secret to a company like Tesla or Apple or NVIDIA or even Palantir is that now you can update in real time. So if you think about that, people say, well, Tesla's not producing any more cars, delivery is down. So my Teslas have updated themselves 6 times in the last 3 weeks. There's new functionality in real time overnight. You can take the existing value of a fleet of 100,000 cars and quadruple it overnight. You can do the same thing with a social network. You can roll out a few lines of code and add $1 billion to the top line. That's what time really means today. Moore's computing law, think about this for a second, said you're going to double computational power every 18 months, right? I think that's right. 18 months? How fast do you think computational power is developing now that AI is on the scene? Any guesses? This blew me away.
3 months?
3.4 months. Double every 3.4 months. So as investors, we have an amazing opportunity to get ahead of that, because most people in the world do not understand what we've just talked about. They don't understand time. They're still thinking it's out here, not here. And if you get here, suddenly those companies become far more valuable. Has anybody had concerns about valuation? Right? We were all trained about valuation, right? Valuation, valuation, valuation. Let me drop a mind bomb on you here. Accounting rules require you to capitalize fixed assets. If you're producing a car, a tractor, a production line, whatever it is, 30 years, you got to amortize it, because that's the way the accounting works. From an accounting perspective, how do you treat digital investments? Digital investments are expensed the moment they occur. So of course your P&L, your multiple, is going to look out of line. The more digital a company is, the worse it looks. So value investing's blind spot today is that it still relies on accounting regulations that were created 100+ years ago for an economy that didn't exist. So the irony when you look at a company like NVIDIA, for example, and I'll give you a real life example, NVIDIA in early 23 was valued at 62x earnings. The latest earnings posted in 2025, take a guess what that figure was worth. NVIDIA was priced at 5x. The markets are a forward-looking thing. So think about that. Next time somebody tells you XYZ is overvalued, it's really undervalued based on the value that's being created in the time compression we just talked about. With that, I'm done.